Well, did you guys miss us? Well, we missed you. Between the sound issues and video issues and vacations and just wanting to enjoy those sunny days we actually had, we thought we'd take a break. Anyway, we're back. And hello. Welcome to Morning Mortgage Minute, brought to you by Green Tree Mortgage Services. I'm Shane Marzullo.
And I'm Janelle Marzullo.
Have you heard what's happening with FEMA? Our beloved Congress passed a new bill. It's called the Biggert Waters Flood Insurance Reform Act of 2012.
These changes may mean large increases on flood insurance premiums. One change is higher premiums for buildings below the base flood elevation, or BFE. Congress, via the Biggert Waters, has instructed FEMA to stop giving premium discounts to properties that are below the BFE, even if they were up to code when built.
Also, this bill phases out pre-flood insurance maps called FERMs and grandfathered rates. In the past, many structures were allowed to keep their original flood risk rating even when the conditions and improved understanding had changed. Now, this generally occurred when a building was built prior to 75 or before a community even received their first flood insurance rate map or FERM.
Now, subsidies will largely end with the implementation of the Biggert Waters Act, which specifies that there will no longer be subsidized rates for newly purchased property, non-primary residences, or a property that has been at least 30% improved. In short, subsidized insurance rates will be phased out for all properties except pre-firm primary residences that have not lost their qualification for the rate. Loss of qualification happens when the policyholder lets the policy lapse, when the property is sold, or if after July 6, 2012, either the building is improved and the cost of improvement is more than 30% of the fair market value, or the building is substantially damaged and the cost to restore it to its pre-damaged condition is 50% of the fair market value of the building before damage occurred.
Now, currently, the properties insured that no longer qualify for pre-firm rates will start seeing their premiums increase about 25% per year until actuarial rates are actually achieved. And when updated maps show properties in a higher risk flood zone areas affected by property owners will see premiums increase towards actual rates phased in over a 5-year period, beginning an effective date of the map that identifies the increased risk. For example, if the actual rate is actually $1,000 per year, that more than a subsidized rate, the premium will actually increase about $200 per year for 5 years. Currently, more than 80% of policyholders do not have subsidized rates. Only about 20% of those are actually all policy pay a subsidized rate.
Yep, and it's not small change. So now, if your listing has flood insurance, you're going to want to go back to your seller and see if they have received this letter, or have them check with their insurance agent and see if they are part of the home subject to the increase.
If it is, you want to find out what the increase will cost your new home buyer and come up with a game plan to make sure that the new home buyer has checked out on the costs of this new policy and has the lender factored in that cost to make sure the buyer still qualifies for loan approval.
If you have a buyer looking to get pre-approved, have them contact Shane or I by clicking on the Contact Us link above. Also, feel free to share this video with your clients, associates, family, or friends. Check out the links below on how you can share our video with them.
So now that you have your homework, now go call those clients that are in the flood zone. Let us know what you think about this in the comment section down below. We'd love to hear what you have to say. Also, subscribe over here. And if you want to check out some of our archives, check them out down there. I'm Shane Marzullo.
And I'm Janelle Marzullo.
Talk to you next time.